Awesome, everyone. So happy you guys can make it. Thank everyone who's here in person. For those of you guys that are streaming live, you definitely should have came in person. So next time there's a better opportunity. I've got Mark and Imran here. Imran was gracious to host us this month, and Mark is the owner of GC Realty. I want to kind of start off by talking about something that I think all of us should take advantage of, and it's about being uncomfortable. And I think when we come to these events, like me, naturally, I'm an introvert. I don't like getting out and being in the front of the room and talking to people, but I think as we grow our businesses or whatever we're trying to do in real estate, that we have to eventually get comfortable being uncomfortable. And I think one of the things you'll find is you continue to invest in real estate and get to know everyone in the Chicago market, especially. You'll see like how super small the Chicago real estate market is. Super like funny, quick story of how all of us are connected without even knowing each other before getting here, except for, I know both of them obviously, but they don't even know each other, but they're still connected. So I joined GoBundance about 6 months ago. You might know it from like Bigger Pockets with Brandon Turner, David Green. Both of them are big GoBundance people. Imran's also in GoBundance. So I took the leap of faith, joined GoBundance, went to my first event in Miami, and I went to the Mixer event, the new GoBundance Mixer event. And I'm walking around meeting new people, and I happened to walk up to a guy and I was like, "Hey, my name is Jonathan. I'm from Chicago." He's like, "Oh, I'm from Chicago too. My name is Cliff." And I've never met Cliff before, ever. And I've known Mark probably since I got into the real estate game. He's what I consider an OG. He's been in for a long time. And Cliff's like, "Yeah, I own a company, I'm a part owner of GC Realty." I'm like, "No way, this can't be possible." I've heard about this guy, Cliff, who's kind of more of the behind the scenes guy forever. And then he, who I've never met before, is like one of the first people I meet at GoBundance. And so at the event. And so then I came to our first GoBundance event here in Chicago at Imran's place. And I was networking, and he told me, "You got to come to this event." So I came to the Queen's party with Kirby, Mr. Pearson, and crazy event. I came in, there's a DJ here. I was like, "What the hell is going on? This is crazy." And sure enough, I like 2 weeks earlier, I networked with an architect with building projects. And I walked up to Tori, who's here, and she does marketing for Imran and building projects, Kaya. And I was like, "Yeah, I'm a general contractor and work in a space." And she's like, "Oh, I'm do marketing for Imran and building projects." And so it's like it's such a small world. And so we're all here to connect with someone. So I just like encourage everyone to get outside of their comfort zone, talk to that person who you need to talk to, because there's probably someone in the room that's the right connection for you now to get to the next place you're going. I always like to look at things from like an A, B, Z standpoint. A, where am I right now? Z, where's like my ultimate goal? But most importantly, like B, what is my next step I need to take to get to that goal? And so I think your B could be in this room. So make sure you take that step and talk to the person you need to afterward and talking. Ask the questions that you need to ask, because these people are more than happy to share, all their information and happy to help. Like that's the cool thing about what I've learned in kind of like the Chicago real estate space is like everyone's more than happy to help. So don't be afraid to ask questions and get uncomfortable. So Mark, could you just maybe give us a super brief synopsis, like who you are, how you got into real estate, and then we'll go into Imran and do the same thing.
Yeah, for sure. Mark Ainley. I own a property management company, GC Realty Development. We manage about 1,200 residential doors and about 1 million square feet commercial. I'm also co-host of Straight Up Chicago Investor podcast, which we really hyper focus on the Chicago market, specifically resources and neighborhoods. And really, we try to interview based on what people should have done or mistakes they've made. I always joke around and say, I made $1,000 mistakes, which if you do that math, I messed up a lot. So if you could save other people from doing that, that's always our goal with the podcast. But been in real estate since about 2003. I think I realized early on that I didn't want to have a cap on what I was going to do in life, and I wanted to be able to kind of control my destiny. And the word at the time, entrepreneurial, but I just knew real estate had a bunch of. I know a lot more about it now, but I always saw real estate to have so many different ways to make money. Whether you're building houses, you're building shopping centers, you're rehabbing, you're just landlording, you're wholesaling. There's just so many different ways. That's how I got into it. And I've always kind of found my way around no matter what the market is.
Awesome. Thank you, John. Thank you, Mark, for inviting me. My name is Imran Khan. I am the founder of ARK Attorneys. I own Atlas Title and Escrow. According to Business Journal, we are one of the top 100 fastest growing small businesses in the nation. Incredible team for everyone that's here. Our ecosystem has roughly 21 people. I've been in business for 10 years. This November will be my 10th year. Love what I do. And we do real estate law, the title company, very investor friendly. And our next project that we have just launched after 3 years in beta is we built the TurboTax of tax appeals. Just launched a couple of months ago, and I think we're gonna change the game. With 6 clicks, you can appeal your property taxes, and we're getting a lot of traction and a lot of hatred on it too. And our title company is our bread and butter, and that's what I do.
That's awesome. All right, awesome, Imran.
Thank you.
So usually I like to start out and kind of selfishly ask a couple of questions that are advantageous to me, and I think to everyone, of course. And I think like real estate's definitely something where you need to treat it like a business. And the sooner you can treat it like a business, the faster you're going to grow. And both of these guys are definitely further along than I am. So like one of my questions starting out, like starting a business, like real estate aside, like what do you think are like the key components to getting started and scaling as fast as possible?
Well, I'll go on that one.
He's ready.
Business, this is actually a go bonus thing. In order to scale, 2 things you guys got to do. Number 1, have an unbelievable team. And number 2 is utilize a program called EOS, stands for Entrepreneurial Organizational System. If you guys should read a book called Traction by Gino Wickman. A lot of the small companies that scale to Fortune 500 have implemented EOS. We have been trying to implement EOS. It's not a one-day job, it's a lifelong implementation. So to scale, you have to implement systems and processes such as an organization called EOS. And that really helps, and have amazing consultants next to you at all times.
Sweet. You guys are running on EOS too, right?
Yes, we are.
Yes.
We've been since 2018, 17, 18.
Okay,
we
so
started running on early on, and it's you get a little better each quarter.
Yeah.
But systems. So for me, so let me start back here though. 2003, 2010, call it pre-recession. There wasn't this. I tried to network. I tried to get to find events like this. I feel that through the creation of first starting online, these different groups or bigger pockets, all these places, communities have grown from that. And I really tried to find that back when I started, and it caused me to fall on my face a lot.
Yeah.
Not knowing what you don't know is one of the most dangerous things when you're starting a business. So it's definitely system and processes. We got to a couple $1 million though before we start putting those in place.
Whoa,
So you can get somewhere, but it's you definitely can't keep going. And like you said, first and foremost, people, especially nowadays, I think the environment of hiring and keeping engaged employees is totally different than it was 15 years ago. So it's that's something that's really we've been hyper focused on the last few years as well too.
Awesome.
Attracting and then keeping. I think you can attract them all day long, right? It's kind of an interview process for both sides, but then maintaining them and keeping them and building that culture, I think for us.
Yeah, I'd say like, yeah, definitely people and processes.
Huge.
We're running on EOS too. So
Awesome. Wow.
common theme, all 3 of us running on EOS. So,
Awesome.
and I think like it's never too early to start implementing that system, right? Like we're a small team, and I think the quicker you can build that culture and system into your team, the faster it's adopted by everyone else. And I know both of you guys are also real estate investors, right? We have attorney, property manager. Starting out from a real estate perspective, like what's the easiest way to get started in real estate if you're just like looking for your first deal? Mark.
Well, there's a dichotomy between due diligence and moving fast. And me and Tom will give entire presentations on this, but I think just knowing enough to start making decisions and understanding what your uncomfortableness in your gut is telling you, a lot of times it's usually the right thing. There's two different type of uncomfortableness in your gut. I think it was this is bad, this is gonna go bad, and then there's this could be really good, but I'm really nervous feeling. So being able to learn that about yourself, I think, is a huge part about being able to really pull the trigger. And I'll take one step further. Just understand what you're looking for. You know, you get people like, I'll buy anything under 300,000 or anything that's any floor plan that comes away. It's like, that's not what you want.
Yeah.
Understanding kind of really, I keep using that word hyper focus, but being hyper focused on really what you want. So when you knowing what a good deal looks like for what you want, and when you see that come across, you can pull the trigger right away, even sight unseen sometimes in a market like this.
Awesome. For first time investors that want to get in the game, what I would recommend is that you invest with someone. I'm a big believer in teaming up, and I invest in people. So when it comes to a real estate deal, I invest in the person that I'm trying to buy from, either the broker or a business partner. So I would say, invest in the people that you want to do business with. So finding a partner that you trust and all that. So
Yeah. Yeah, I think one of my favorite quotes too is like, let discomfort be your compass. And so like when you feel uncomfortable, like Mark said, that's probably a good time to be leaning in. And for me, like there's always three things I'm always talking about in chronological order, like especially if you're getting going. Like number one, simply like educate yourself, right? So me, I started reading a ton and I got in bigger pockets. Those are the two biggest game changers for me. And then two, I just started networking. I went to as many networking events as possible for 2 years, and my sphere just grew dramatically. And then the third thing is just taking action and being decisive. I think if you can do those three things in that order, it's almost impossible to not end up being successful.
Can I add one more thing?
Yeah, of course.
I love this analogy. Like you could read all day long how to ride a bike, and you can watch other people ride bikes.
yeah, awesome.
But until you get on that bike, you're not gonna be able to actually truly learn how to ride a bike. And I love what you said about partners, because if I'm a big fan of partnerships.
That's good deal.
I'm down. I've had some bad ones, but if anything like that, it takes some bad partners to realize what a good partner is.
Exactly.
Again, that's just not knowing what I know back then, but that's similar to the jumping in concept.
Yeah, cool. So property manager, attorney, so we can talk about evictions, we can talk about tax appeals, we can talk about getting leases filled. Any specific questions that we can throw at these guys to make them feel uncomfortable? Bernie, I see you. I'll repeat the question too, so if everyone online can hear.
Okay, let's go with the eviction.
Eviction for 1,000.
Since the world has opened up, is it easier now to go through the process as opposed to last year when there was no process?
Yeah, so the question was, so everyone can hear online. Obviously last year and the year before we had COVID, everything got super weird and crazy. It was hard to get people out from an eviction standpoint. Both of you guys, have you felt a shift in change in the eviction process and how long it's taking? Can you kind of walk us through like what that would look like?
Illinois, particularly Cook County, is not a business-friendly state, very tenant favored. There was a moratorium, meaning no evictions, until early this year. That's what you said, Bernie. My advice to you guys, if you are in an eviction process, the courts are so backed up, it is more efficient to just write a check or negotiate with the hostile tenant and get them out, either through a third-party vendor or through a law firm. I prefer a law firm where we use like a sheriff service. Because if you go out there, they might make other claims against you. And so my response is the courts are so backed up because they just opened up earlier this year. I think, don't hold me to this, I think like 120,000 complaints behind. So it's not friendly. I personally have an eviction in one of my own portfolios. I just wrote a $2,000 check, which is much more efficient than going through court, because filing fees is $600 by itself without an attorney. So that's a business answer.
I think for us, we moved back towards our pre-COVID eviction like process because we were spending a lot of time spinning our wheels, negotiating payment plans that are failing and so forth. But a lot of what we put into eviction, our goal is not to kick them out. Our goal is to get some sort of court order payment plan or some sort of negotiation, or even sometimes put them in a court allows them to trigger that one-time pay in full thing that they could do, and they can be caught up right from there. But I think for us as a property management company, sometimes just getting served from a 5-day notice from a process server standpoint, kind of like, oh, they're for real type standpoint. But Cook County is still longest. And I always joke around, even when we had the moratorium, like any landlord in Cook County, like we never wanted to wait till the sheriff showed up anyway. So we were always practicing cash for keys long before it became anywhere known in the rest of the country. So if you're able to do that, I also think though, even if you get them at court, I think your cash for keys negotiation is even stronger. So you might have had to eat the $600 to file or some attorney fees, but then still to cut a couple $1,000 check to not wait 3 months for the sheriff, that's still, you do your numbers. It makes sense.
What else?
Yes.
Curb question. So the Illinois funds to help tenants pay rent that were behind and all this COVID stuff, I've heard that's all dried up.
That is
But
true.
I heard there's a new program that the courts are paying back tenants' rent. Does anybody here have got any rent from the courts? So, you don't want to, I guess in the old program, you couldn't be in evictions to get the money. Now, if you're in evictions, you can ask the judge, and people are getting money through the court. They said there's going to be money through July in this program through the courts. I'm just wondering, has anybody got any money for a tenant through the courts?
So
Just curious.
I heard $150 million of that money was allocated to the courts, and it's supposed to be like, all right, you're behind, go over to this room here, and that money was supposed to be negotiated. I have not seen that happen in that context.
I've heard about it, but I haven't seen anybody get paid.
Correct,
So,
correct.
Since that money's dried up, we didn't want to put people in eviction because we got a lot of checks for a lot of tenants. And now I'm like, oh, is this for real? And here it is, but I haven't heard anybody who's got any money for their tenants through the courts.
But what we're seeing though still, so they're not accepting any more applications, right? We all know that's closed, that website. And but the people that filed applications, they're not officially closed. So if you put one of those tenants in eviction, they could still get money from someone that might have filled out an application for one of those grant programs 3-4 months ago. And I think sometimes going to court ends up prompting some of that to move along faster on the back end, or the tenant finally gets involved and is calling up IDHA to see where the application is, all that. So can't submit anything new, but they haven't officially closed it. Maybe you have anything more on that, but that's what our experience is.
There's no money, Kirby. Sorry.
Well, the Illinois.
That's great theory, though.
RPP or something like that, that's still open.
I don't know if you can file new applications for it.
I just filed one.
Oh, really?
Yeah.
Yeah,
Okay.
I heard there's no money left.
but I don't know.
What other questions?
We have a question in the chat. Can you guys talk a little bit more about arbitration as a method to get started?
Arbitration in what context? In a lawsuit or in a eviction?
That's
So
a good question.
yeah.
I will hand back to the
So
person.
arbitration is very simple. I know there's a couple other attorneys here, like my buddy Anan. Arbitration is definitely always what we preferred. Going to court, the business response is that going to court is costly. It is always great to sit down and hash out outside of court an arbitration.
Yeah.
So that's what I would always vouch for instead of going to court, hiring 2 different attorneys. Their incentive is to bill you and extend it. So as business owners, the best method is to sit down and arbitrate and come to a solution.
Yeah.
Someone had a question.
Yeah, Nathan.
So I know you're probably not gonna have a full answer to this, but I'm just curious on your opinion. Given the fact that we have more uncertainty right now in the market in in general and with real estate, where do you see real estate heading in the next 6 months to a year? Like, do you see it? I know we have more opportunities because it looks like there's more foreclosures, but at the same point, there's a lot of other things happening, so.
Yeah.
I'm trying to get an idea of where you see the market.
Yeah, no, good question. So question was, where do we see the real estate market going in the next 6 months? Obviously, none of us have a crystal ball, but I say we have a decent pulse on what's happening. Mark, what do you think?
Did you say you want to go first?
Yeah, so, so the question from Andy is, where do we project the real estate market to go in 6 months? I would actually like a couple of my guests to respond to this eventually, but from our business perspective on settlements, which means closings, we are at an all-time high. What I'm seeing on the back end is that because the stock markets are doing so bad, our money is coming from stock markets, from the NASDAQ and all that, through these brokerages accounts. So I guess to answer your question, because the market is so volatile, people are parking more money into real assets, which means real estate, which is more stable and doesn't fluctuate as much as the real estate market. That's what I'm observing on our business back end. We are at an all-time high at business. I think there's a couple of brokerage owners here, includes you. I know a couple of investors are also beyond busy as well. So I think the market's pretty strong, but I am forecasting a recession.
One thing I've been telling people to keep in mind is, 2008, that was a true real estate bubble. Like, real estate screwed up the entire world. But if you look at many of the 7 or 8 other real big ones over the last century, none of them are real estate cost. So there's things that could be happening out there right now, whether it be inflation kind of setting something off to raise prices and people slow down spending, and then employers lay people off. There's other things that could happen, even though we all in our nice little real estate bubble that we have, that's the wrong word, real estate circle, we have here, everything looks great. Like, for us, our brokerage, both our commercial and residential side, we're at record years.
Yeah.
Like,
Good job.
we're doing great with that, but there's things that are happening outside of the real estate world that could eventually fold into us and cause issues with us.
Can
So,
we ask a couple of guests?
yeah, for sure.
So I would ask, like, Anand, he's a huge, you have a huge fund that's buying everything you see. What do you think?
Yeah, so just to give you a little background on us, we're very much worst case scenario guys. We own over 250 properties. We're always preparing for that bubble to happen and for there to be a crash. And so we're very careful in our mindset in trying to buy properties at a discount where we have a little bit of a cushion. That said, for the first time in a while, I am actually very bullish on the real estate market. I see prices going up. For me, I mean, inflation is at an all-time high, is real. And so if you think about it, anything new you want to build, it's costing much more. So anything you have bought previously, you essentially have built in equity, because to replace it, prices have gone up, right? And so for me, the market is scary. There may be a short downturn in the market, and I think there's going to be like a redistribution of wealth where people are personally affected. But to me, real estate is a hard asset where it's going to hold its value over time. So again, I think it's one of those things that if there are downturns, if there are difficult situations, you have to be able to weather the storm. But with inflation, I would argue rents are going to go up. And it's just one of those things. You need to park your money in something, because your money is becoming worth less over time, right? $1 million now is what 800,000 was before. So to me, real estate at least allows you to hedge in an asset that is worthwhile and makes sense.
I love that. One more thing to add to that. Going into 2008, 2009, there wasn't much cash flow. Like, I had my own little plans and ways I made money, but it was all about appreciation or quick flipping and stuff like that. And now there's still cash flow opportunities out there. There's probably tons of transactions that happened in this room in the last 30 days that all had cash flow. So those things are still out there. And if you buy something that the numbers make sense, like you said, the rents are not going to probably go down. If anything, they're going to go up. And over time, 10, 20 years, if you're looking to hold these for your portfolio for long term, some of this part of the conversation is kind of irrelevant. If you find a deal today, it's still a deal today, even if the market went down 20% 6 months from now. One other thing I was gonna say for that, I think just short-term plays is probably where your risk is the most. Like, if if you're buying $1 million places, flipping them, sell it for 1.7, like on the short term, like that's where your risk is, because also that 1.7 due to some market corrections could go down to 1.4, and that was your profit minus 100,000 you just put into it. So short term, you got much higher risk than the stuff you're looking to buy that does cash flow today, and you're going to hold for the next 20 years, 10 years.
Yeah, and just to add to that, I mean, I think for any first-time investors, what I would say is make sure you have an out, make sure you have a long-term plan. So maybe your plan is to flip the property, right? But you want to be careful of not getting stuck in a short-term loan where you get caught, upside down. As long as you have a fixed mortgage, you're locked in, who cares, right? Worst case, you can write out the storm, as long as you can cash flow, or even if you have a little bit of a loss, as long as you can maintain and cover it, on the other side, you're going to be able to increase rent, you're going to have better scale as you add additional properties. But the main thing is just not getting caught in a downtrend that could happen and being able to weather the storm.
ARMs and interest only loans. Be careful of those.
Hard money.
What else do we have?
Right, I have two. You mentioned interest rates. So interest rates that are what 5%, 5.5 for a 30-year mortgage, and Jerome Powell keep mentioning a 50-point rate hike for this whole year, pretty much. So how do you think that would affect it? Do you think prices will keep going up since interest rates, are also going up? So
Yeah, so for me, it's just the cost of doing business, right? So interest rates are going up 1%, 2%. As long as you buy the right price, as long as the rent can handle that, you're covered, right? And so for me, what I see rents appreciating faster. I see the value of these properties appreciating faster than the interest rates that are affecting it. So as long as, again, you just need to make sure you can cover that. And it goes back to what Mark said, where you don't want to get stuck on a variable loan. You don't want to get stuck in a situation where that's going to get jacked up. If you can lock in, especially for your first few properties, a 30-year mortgage, you need to factor that in. And at that point, whatever your interest rate is, 5%, let's say it goes to 6, 7, that's locked in, that's fixed, right? Whereas your rent is a variable that you can increase. So that's where, again, whatever it is, it's just the cost of doing business for us. Yes, interest rates are higher now than the properties we bought 5 years ago. It's factored into the price of what we're buying now.
Interest rates will affect you if you're selling, because buyers they buy, especially owner occupied, they're buying a payment. And if they can afford an $800,000 house based on their payment, they'll do it. But if they can, and it get some $600,000 house, that's going to affect you as a seller and where you're trying to get.
What else?
Andy, what do you think about interest rates?
Yeah,
Oh, yeah, good
so
question.
it's
Yeah.
interesting you mentioned the Fed rate. So just remember that the Fed rate doesn't necessarily automatically affect the mortgage market interest rate, right? So there's other contributing factors. So we're actually, we're using ARMs at the moment for certain clients because we project within the next couple of years, there'll probably be a downturn. And even recently, with the volatility in the stock market, we've actually seen a decrease in interest rates. So even after the 50 basis points hike from the Fed. So they aren't directly correlated. And I just, factor that into your calculations and making sure that, as long as you can afford it and it makes sense, do it. Thank you.
Bernie.
If no one else has questions. So to each of you, how is it that you get to pick your partners that you trust and that you don't worry about them taking off with the checkbook the next day? Okay, that's my partner.
It's passwords.
But how is it that you're able to find someone that you trust? Because I would relate this to relationships when you go on a date. If you go on a date the first time, you're not going to move in and give them all your funds. It takes trust over time. But how is it that you find the people that you trust and not worry? I mean, it took time, but what were some of the goals?
Okay, so the question was, what's the best way to kind of establish a partnership, and how do we decide who we're partnering with?
So great example today. We've known of each other. First time we're meeting today. I can tell by our synergy, where he is in his business, where I'm in my business, where he's headed, where I'm headed. There might be an opportunity if the deal comes on, because I think our mindsets are very similar. And I think if there was a deal that he needed something or back and I needed something, he would reach out to me or I'd reach out to him. So I am scanning already since we hear who I can partner up with, and he's doing the same thing. That's why he's smiling. and he's the same thing. So I guess you just have to have that synergy. And track record is very important. Reputation is very important. And that's my response to you.
But I think the best partnerships I have, or my current partnerships, we all bring something different to the table. If the worst partnerships I have is where we're the same people try to fight over doing certain things in the business to add value when the other part's still getting neglected, and that's where we end up fighting about the part that's getting neglected because neither one of us want to touch that.
Yeah.
So, my two partners I have on the property management side and a bunch of investments, we are three different people that have three different strengths, and we came together based on those strengths and weaknesses, and we all kind of knew each other. The whole dating period would happen in a roundabout way, but it wasn't direct. But it's just a level of confidence. There's going to be some leap of faith, but then at that point, that's where your operating agreement is going to come into play to make sure you lay out what the divorce looks like, right? It's your prenup for partnerships, and that's important at that point to lay it out. So I'll tell you this: I had a bad partnership, and we had a bad operating agreement, and it made it really difficult to split it up, especially when we had all these different properties we had to move around. And then we spent so much time on the new partnership just to go buy 3 or 4 properties, like small, individual ones. And ultimately we end up doing way more with that. But just putting that time up front will make sure that you're safe on the back end if that guy runs off with your checkbook.
Hire Imran to draft the operating agreement.
There you go.
Yeah, I think finding people, like Imran said, who are like-minded, people who do the right thing. I think we all know what's right and wrong. I think a lot of times we fool ourselves into thinking we're doing the right thing when we're not. So one of the things I'm always trying to practice is being honest with myself. And the more I'm honest with myself and I hold myself accountable, the more I'm going to be accountable to other people.
One more thing the cool thing about real estate is you only have to find a partner one deal at a time. If you have a business or you're trying to buy a franchise, you're a lot more entangled with that guy for an undefined amount of time. If you and me buy a property together and it doesn't work out, we can either sell, buy one or each other out, but we could do it in a fairly short time frame with not as many moving parts to it. So we have in our space of real estate investing, there's a lot of good synergy there.
Other questions? Anyone else? Yes.
I'm curious about this turbo tax for property.
Yeah,
tax
yeah,
appeals.
yeah.
In particular for county. I don't know if it's, outside the county, but anecdotally, will say that unless you hire the right firm for your real estate deal, you don't get anywhere. How are you tackling that, or how are you anticipating tackling that? And do you have any success rate so far with your program?
So we spent around 2 years building this out. Some people know about it. Our algorithm is, we just trademarked it. We believe we're the TurboTax of tax appeals. Let's take Cook County, for example. Only 62% of property taxes are not appealed. We're focusing on residential, like a condo or a single family. And what we did is took what our software is called Taxbacknow.com. We were invited to 1871, and I don't know if you guys are into technology world, Merchandise Mart. We just got valued. What we did is took all the paperwork, all the comparative market analysis, CMAs, and built an algorithm and automatically does tax appeals based on that. And we have certain certain techniques going on. If the border review level, if it gets denied, we will not go to the next level, right? The software will recommend one of the vendors to use to go to the next level. So essentially it's 6 clicks that you can try it out. I'm not trying to make a pitch, but you just try it out. Taxbacknow.com, give us your feedback, and a lot of, we've done over 1,100 tax appeals this year, all through algorithms in less than 3 minutes.
But only on single family and condos so far.
Right now, single family and condos, correct.
How come not 2 to 4 units?
We need another 6 million in funding.
Okay.
Unless you want to go in.
He's got a checkbook back there.
Yeah. Taxbacknow.com if you want to check it out. That we're getting a lot of positive and negative traction. We had to lawyer it substantially because it is essentially taking out tax appeal companies, tax appeal law firms. People that have 10 people on payroll, we're doing it through algorithms. It's just a scary market for a lot of people. But in a consumer perspective, you can appeal your taxes in less than 2 minutes.
But it's the results that matter.
Well, if you want, yeah, so if you're at $1 million home in Lincoln Park, Kirby's, let's give, like, I'm not gonna take certain people's homes here because they're a couple of $1 million. There's, a $200,000 tax bill. We might not be the best fit for that. For an average purchase price of 300 to 600, that's ideal.
Interesting.
What else? Anything? Yeah, well, I think I can add on like technology, right? Changing the
Yeah.
game for sure. Like we're definitely, we call ourselves a tech focused general contractor. Can you guys just talk a little bit about like how technology has changed your business and what you're doing to continue to innovate and stay ahead of the game?
Something we just rolled out this week for screening applicants is this face recognition thing that matches their face with their state issued ID. Because we're getting, over the last year, we get about 3 or 4 like really fraudulent, like driver's license paperwork and there's a bunch of different things we have to do that it's not part, like once there's certain red flags, we have to go down a rabbit hole to figure this out. But yeah, just trying on the front end to utilize technology to make sure there's to limit the fraud on the screening is one thing.
I think our firm's success and our title company's success is purely based on technology. We're not, when it comes to handling large accounts, for example, Pearson, they give us over 100 files a month. If it wasn't for our technology, he wouldn't be working with us, with all due respect. It's not like he likes me. It's technology that has put us on the map. Yesterday, I think, we did 13 or 15 closings and it was all streamlined. So if it wasn't for technology, we would not be where we're at. I think we're one of the only handful of residential law firms that has an on-team tech company. Adnan and Alia, which they're not here today, but we're very tech driven, and that's the future of the industry.
Yeah, I think we have to like continue to be doing more with less. And I think technology is what is going to continue to change everything we're doing. So if you're not utilizing technology, like there's no way you're going to stay in business and you're going to definitely fall behind. I know from like a property management standpoint, are you guys using Appfolio, Buildium, Appfolio?
So
Podio, I think.
we built out our platform on Podio, which has been a game changer for us just because we're able to take all that data and just organize it any way we want. We use Appfolio for the financial side of things because we don't want to rebuild that, but Podio has been a game changer. Just there's so much predictive stuff you can do with that data that has been big for us.
Yeah, so I self-manage still. I use a technology company called Hemlane, and they can do maintenance and actually do it decently well compared to other tech companies in the game. And I'm self-managing, so I do all my rent collection, all my maintenance, all my leasing is all through there, and it's a super easy software to use. And it's called Hemlane.
I think about it's just some of the low hanging fruit that a lot of people have not adopted yet, just like calendar links. Like nothing drives you more crazy than like, oh, can you do 2? No, it's 2:30. Oh wait, I forgot my son. Like to have these calendar links in your email to be able to coordinate time literally trims off hours of your year. Like so, it's for your own personal growth to be able to kind of optimize. You got anyone read the book Atomic Habits? There's a lot you can learn about what I'm talking about right here. It's just kind of taking these things you're doing every day and just in some way systematizing it to be able to buy yourself back days at the end of the year for whether it be sit on a beach or buying more deals or whatnot. I think there's a lot of little things that you could optimize with technology in your own life.
Yeah, I think time, right, is the most limited resource we have.
Something you can't.
Well, we all have the same amount of time.
Exactly.
That's the one that always gets me. It's like, man, that guy is doing so much more and he has the same 24 hours I have.
Yeah. Now I love I hate the connotation of being busy because I think everyone is busy, right? We all have, the same amount of time and we all have the same amount of opportunity to use that time to do what we want to do. And I know like the littlest things can start saving you the biggest amount of time possible. I know for me, a big game changer was like hiring a virtual assistant.
Oh, yeah.
The small, like, and they can do so much work for you and unbelievably do a great job. And they're more than happy to do what they're doing, right? Like you might not be paying them a ton of money, but they might have been making $4 an hour before. Now they're making $6. Like me, I'm happy to be hiring those people to give them a better life than they're having. Do you guys use virtual assistants?
I have 2.
We have like 26 of them. Yeah, so but they are no different than they have specific roles and they handle like they're not just even assistants, they're true
Team
employees.
members.
Yeah,
Yeah,
like we most of them are in Mexico. We'll bring them up. We had one in last week. Someone else is coming up next week, and they come up. They work there with us for a week, and it's great. It helps us really just do more with less. So
Yeah, that's awesome. We use Upwork to get our virtual assistants. What you send me some links?
we hire direct for the most part now. We just put ads on Facebook. We'll pay them through Upwork. But
What about you, Imran? You know
I
any
use
partners?
2 companies. One of our business partners in our East Coast title company, who owns ATG, they have their own Morocco team that we utilize. So they hire for us. Yeah.
for anyone doing wholesaling or just trying to find deals or there's they call them virtual assistant VAs, but there's companies specifically built out there for real estate industry that they come with half of an idea of what they're supposed to be doing. So I do have a referral for that. I mean, you might have one as well too, but I think it's a great way to leverage time.
Let's talk about, I just want to talk about closings. Our industry, everyone here is in the real estate game. So our market in the next, I would say less than 5 years is going to go through a huge change. It starts off with the Notarial Act. So the Illinois Notarial Act is being about to be changed through lobbying to allow online closings. It prevents fraud, right? Do you guys, Cook County and I think Miami-Dade County are the top 2 counties in the nation with deed fraud. Yeah, you look at your
I
laughing.
stress out every time I got to wire money.
Yeah.
Like,
Oh God, wiring money's another nightmare.
oh, that
So,
scares me.
but I think our industry is headed for the biggest change and I'm excited about it because all the competitors can't keep up. There's less than 7 people that have e-recording machines for deeds and stuff. We're one of them, and I think the market's about to change in less than 5 years.
That's great.
Yeah, wire fraud, guys. I want to talk about this real quick.
It hasn't happened, but like I'm so
Yeah,
scared.
God,
It's a
big-
huge, like it's
oh,
like
God,
billions
I
of
know.
dollars lost over here.
I don't want to mention a big lender here. One whole day, their wires were hijacked. So we mentioned this a lot in our marketing stuff. Wire fraud is very, very prevalent in our industry. I cannot mention how many times we've seen issues. If you receive wire instructions via email, never wire money. It has to be a verbal phone call or a couple step process. No wire instructions via email, never wire money, even if the day of closing, until you get a physical phone discussion.
I answer that as well.
Please, Andy,
Yeah.
yeah, is it in our industry? Yeah.
Right, even if you speak to someone on the phone and they say, sure, I'll email you the wire instructions, you still call that person back and confirm
Yes.
that what you received in
Thank
the
you.
email is what they meant you to receive.
Yeah,
Right?
correct. Very prevalent in our industry, very scary right now. Actually, I think Andy and I can speak. People are mimicking us, right? So it's very, right now you can just Google our names and people will pretend to be me or pretend to be you. And we have access to funds and just
Lots of fun.
lots of funds. So be careful.
What else? Any other questions?
Yeah. I have one.
Please.
So I know you mentioned Hemline for your property management. What other software do you think would be ideal for someone that owns less than 50 units?
So the question was, what other software would we recommend for people who have under 50 units? I know we also use Asana as more of like a project kind of task management system. We love Hemline, we use Slack, standard kind of conversational technology. Do you guys have anything specific for kind of smaller new landlords?
I use Buildium.
Yeah.
I like Buildium. I built out a workflow. I built out a team in Buildium where I have a plumbing issue, electrical issue, roof issue. So you kind of task it based on your team. I like building. Their app is amazing.
One thing I think is cool that Show Mojo, there's a couple different showing systems out there that people could use where even if you only have a couple rentals a year, you know, especially right now in a hotter market, you might get 40 phone calls that first day and you ask them the same questions and all that stuff. But it has you basically will set it up where they will schedule it off of Zillow and they can pick the 3 or 4 times you're going to be there this week. They have to go through 3 or 4 screening questions. If they answer any of those wrong, like, do you have an eviction? Yes. And then it says it doesn't let them schedule it. But then all of a sudden you just show up that time and then you walk them through the place. And we do group showings as well too, look around that.
Yeah, group showings are key.
But it just kind of streamlines, you know, especially if you are working and like you're only going to show on Wednesday night, Saturday already. You're already trying to get everyone to just show those 2 times. Just put it online, it automates and drives everyone to those 2 times. Show Mojo.
Show Mojo, yeah. And then, yeah, I'm pretty familiar with like that prop tech space. So there's like Avail, Tenant Cloud, Turbo Tenant.
Yes. Yeah.
Those are all
Tenant
like,
Turner. Yeah. There's a few of those. We use Show Mojo. We've used it since 17. It's great.
yeah, all of those do the same thing. I mean, you have to automate your rent these days. Like
Yeah.
if you're getting
Yeah.
cash or
Yeah.
a check, like you've got to get into the 21st century and automate your rent because it's just so much easier.
I don't know if this is cool or not, but I thought it was really cool. I found an app. I think I found an accident a few weeks ago. Kubi Casa, and
Write
it's
this one down.
for $30. You can do a floor plan with your iPhone or your Google phone, but you just walk through the unit and it scans it. It gives you it's a 2D floor plan, but I mean, that's usually, you can do it yourself then. It's kind of cool.
I just saw one yesterday, avail.co. That's a cool one too. It's
Heard
cheaper.
about that one.
Yeah, so there's a lot of out there.
Kubi Casa, Cubicasa.
Technology is leading the world.
But
I-
Is it like virtual staging? What is it?
no, it's just 2D floor plans. So for you, you might like it for construction.
Yeah, we use another software called Magic Plan, and I actually take like my Bluetooth, or not Bluetooth, but the laser, right, the blue beam laser, and you can measure, you know, put it against the wall, and it'll draw the floor plan with exact measurements too.
I have a question. As I'm building my portfolio and getting more busy and busy, instead of having 1 or 2 or 3 guys manage real estate, I'm looking into a property management company. So there's a couple of guys here that own property management companies, including you. What do I look for? And what are my negotiation tools? And what value would you give versus, you know, the person next to me and all that stuff?
So I think
Who else owns a property management company here?
You do.
You do, yeah. So like, yeah, what's the difference between you guys from a consumer standpoint? So if you have 50 units, you're gonna need a property management soon. So, okay, so what do I look for to get?
well, so I do think though, when you get past a certain amount of units, call it 80 or 100, I think the economies of scale does benefit you to maybe in-house it. So I'm not trying to give myself away business, but I do think that is a reality. I think for us, when I handle the sales and marketing on our side, and I think really when you hire a property manager, a large part of that value you're getting for that 7 or 8% that you're paying on a monthly basis is your time back. So, you know, we calculate, you know, per unit on a non-renewal, a non-turnover, you're gonna put about 20 hours into that unit.
Wow.
If you have a turnover, you know, that could triple or quadruple depending on how much you got to be involved in the work and leasing and so forth. So a lot of that value you get is buying your time back. Now, you're buying your time back and you want to make sure that the property manager can accomplish those tasks almost as good as you can, right? Like if you're living on site, you're picking up the garbage every day. You can't expect the property manager to do that or to be able to do that, or you'll just pay way too much to have that done. But I think understanding what the value proposition is just really to take that away, give your time back. And I also tell this too, you know, I get a lot of people, you know, the natural question when people call up is like, what do you charge?
Yeah.
Yeah.
what's it called?
Educate me, I still don't know.
No, like that's always the first thing that people always ask, and mostly because they don't know what questions to ask.
What do you charge?
Depends. Where's your property located?
Uh,
That's always
What
funny.
a
What charge?
turning answer. Depends.
But I think understanding, you know, look at this. If you have $20,000 worth of rent coming in and you save 1% because you beat some other property manager up, but they suck. But you're gonna pay way more than that 1% that you think that you won the negotiation on. So I always tell people, like, we are one of the more expensive property managers. We're not a discount rate or anything like that, but we're gonna make up that money at other places, and you got to make sure you're finding where you're gonna get your value from. You know, there's a lot of people that hire us that don't have a vendor network that, man, it costs them $7,000 to paint their place every time they turn it over, but they know when they come to us, if it only costs them $2,200, they'll make up that value in a year's time.
Got it.
So you got a lot of people just don't have the resources or the time, or they put a bad tenant in there. They realize that they're not good at that. And now they just want to outsource that and make sure that they don't end up in this situation again. But hire, there's a lot of information online now, property managers, like you could Google it up and you can see the range of anything from a 1-star, like how you even exist still, to, to people that have 500-600 views. And I think there's a lot that tells them that. This is what I always tell people. Property managers are never gonna have perfect ratings. And I think sometimes to a point, if you're enforcing your lease, you're gonna piss people off no matter what. If you're doing your best for your client, you're gonna piss people off tenant wise. But I think it's how you see people respond to the adversity online in the different review formats and so forth. I think is important. I think when you're looking at a property management company and you look at like a place like Glassdoor and seeing their employees, I think happy employees are going to ultimately provide good service to you guys and as the clients. So I think that's another place that gets underestimated, is how much information you can really get from that company you might be looking to hire.
And Glassdoor is a platform where employees can review
Yes.
companies.
Yep.
For everyone that doesn't know.
They give like a CEO rating. They give all
Yeah.
that stuff.
And so, but yeah, that was actually such a good point. I've never even thought about this. Like, go to Glassdoor and see what the employees are saying about the company that they work for. If the employees are happy at that company, like there's a good chance that it's a good company, right? To hire.
Yeah. Like we have some negative ones on ours, but it's like they move fast and they're always trying to change things and they're not training on the new stuff fast enough. It's like, all right, we are trying for better results, and we are always trying to switch things up. There's always new technologies. So some of that stuff, the bad stuff noted by them, is that was bad.
Sweet. Any last question, anyone? Or can we get back to networking? Good.
Guys, there's food, there's tons of drinks. Enjoy yourself. Thank you.
Yeah, thanks everyone for coming. Again, my name is Jonathan Clem, Mark Ainley with GC Realty, and Imran Khan with ARC Attorneys. Best way to get in contact with you guys, besides being here if you're online, social media,
You can find us on
LinkedIn.
Bigger Pockets, Facebook, Straight Up Chicago Investor Podcast.
Yeah.
Check that out. We have a lot of good resources on there as well too. But we also have contact.
You can message me on Instagram. We're big on social media at ArcLaws, or our email info@arclaws.com.
Awesome. And Andy Smith, my other co-host with A&M Mortgage. So you have a lender, contractor, property manager, and attorney. So your team is right here. So come up and talk to these guys and let's make some deals happen.
Professional or like this?
Both.
Professional.
Professional, right? 1, 2, 3. Other direction. 1, 2, 3. Okay.